What's up, guys? Welcome to lesson 2, where we will be covering key support and resistance levels. I'm hoping you guys enjoyed the previous section I did on trends. So now this is another piece of the trends and how we can use them to trade. But the first thing we're going to go over is we're going to cover the topics of what is support and what is resistance. Okay, so what is a support level? The support is formed when price reaches an area and reverses. So this is normally an area to the downside and reverses. Support acts as a floor for price. We're expecting these areas to support price being above them. So they are quite literally like if you have a tennis ball and you bounce it on the floor, that is a support. Okay, and what is a resistance? A resistance is also formed when price reaches an area and reverses. So this is when price is pushing to the upside. Resistance acts as a ceiling for price, meaning we are expecting price to stay below these areas. Same thing, you have the same tennis ball, try to throw it through the roof, you're going to find resistance, that is the ceiling. So this is where ultimately, obviously, if that is the top of price, we can enter sells there, and if we're at the bottom of price, we can enter buys there. So let's go to the next slide. Okay, so here I have an example of gold on a support level. You can see here that price is bouncing off this level, meaning every time price comes to this level, it goes to the upside, right? It reaches another level of resistance and then comes back down to the support. Okay, so this is a clear and probably one of the easiest examples of support and resistance. If you want, you can go check this out on gold on a daily time frame. It just shows that price is being supported above this level. Okay, the example above shows how a support level keeps price above it. This is an area that we look at entering buy positions from, right? So just to explain on that, if we have a history of price bouncing at this level, we should already be looking at, okay, if price comes back here, I'm going to be buying it. And I have an example of where gold came to this level and I bought. So stick at the end of this, I'll attach a screenshot of me taking a trade based on support. Okay. So the next one is resistance. The example above shows how a resistance level keeps price below it. This is an area that we would look at entering sell positions from. So you can see here, I'm not sure what pair this is, but you can see price is resisting this level, meaning it's a tennis ball, right? So we keep coming up, but we keep falling. So every time we come up to this level, we fall. Okay, so this is a clear example. There's a few key pointers I want you guys to take with support and resistance. Okay, support and resistance occurs on every single time frame. Okay, there is 1 minute support, there is 5 minute support, there is 15 minute support, there is 30 minute support. There is support and resistance on every single time frame, but with FX Go 3.0, we only want you guys to focus on support and resistance that is higher than an hour. So you guys shouldn't be drawing support and resistance levels on a 30 minute time frame, because those time frames, they are valid, but they're not areas we should be looking at taking trades off alone with support and resistance. Okay, it's very, very important that you guys know that. When trading with support and resistance, we still need to look for extra confirmations to support that sell or buy. You will see 9 out of 10 times, if there is a double top, which is one of the patterns that we're going through in 3.0, a double top occurs at a level of resistance because it is a reversal pattern. Okay, and this is a perfect example of how resistance work. It's a price will retest that zone, giving us a double top, allowing us to sell. So that is 2 confirmations. The third confirmation could be that we're at the top of a trend line, or we're making lower lows, lower highs, and at a resistance we're going to enter. So there's multiple keywords. I will go into practical, so don't stress if you don't understand, but let's get through the theory. Okay, so key support and resistance levels. Like I said, there's some key points. Okay, these areas are identified on higher time frames. The higher the time frame, the higher the confirmation. So anybody that knows me and knows my lessons, I always say the higher the time frame, the higher the confirmation, which is exactly why I just said we shouldn't be using 15 minute and 30 minute support levels. Anything from a higher 1 hour or higher, the better. So for example, if I can explain this to you, if you have a daily support zone, right, that daily support zone is stronger than the 4-hour support zone, right? Because it's supported on a daily time frame. A daily time frame composes of many candles, lower time frame candles. So 1 day candle represents 24 1-hour candles. Okay, so if you have 24 1-hour candles bouncing off a support, that is very, very strong because it's on a daily time frame. That makes sense. An area identified can be both support and resistance. I'll show you guys some more examples of that on the next slide. The more time price tests either support or resistance, the more valid it is. So we need to know that there is a a good history behind that level that we're trading. We can't just literally just draw a zone and say that's resistance. We need to see that it's resistance by looking at the left, right? By looking at the left, we can help understand what's going to happen on the right. So it's very, very important. Okay, above an example of where a single zone can be both support and resistance, right? So you can see here, price is resisting, and then all of a sudden it supports. Okay, so that is why I said when we're looking at taking a sell from a resistance, we need to get an extra confirmation. We can't just trade with this resistance level alone, because you can see price rejected, but then went straight through, okay, and then supported. So this level here is very, very strong, and now we could look at this area for taking buys. Okay, this will be known as a breakout retest, which I'll get into more as we combine all of the strategies together. Alright guys, now that we've had a look at the theory behind support and resistance, I want to take you guys to the charts just to see how we can start identifying these in the real market. So the first thing I want to look at is gold. So this is gold on a daily time frame. This is where we start. Okay, I want you guys to be very, very clear. This is where we start. We start on the daily time frame to get the overall direction of where we're moving. So the first thing I'm going to look at here, I'm going to look at the support and resistance level like we just spoke about. That support and resistance level that I showed in the example is this example that we have right here on gold. Okay, I will attach an image that will pop up right now of me taking this trade on gold based on the support and resistance level of gold. And this is a level that I spotted on the daily. I targeted the resistance, my stop loss was below the support, so now we have a buy. This is one of the easiest buys that you can look for, especially on gold. If market comes back to this level, we can look at another possibility of entering more buys. Okay, but I want you guys to be very, very clear. If we break below this level is likely to hold as resistance for as long as it held support. Okay, and that is why the daily, or the higher the time frame, the stronger the confirmation is, just because, like I said, a daily candle composes of 24 1-hour candles rejecting a zone. So if we go down to 1 hour, right, and we look at that key zone that we've had identified, we can see how price bounced, right, and it bounced relatively quickly, following the same rules that we just spoke about in impulse and corrections and trends. So everything here, I want you guys to see, everything here should be linking in your guys' head to make sense. Okay, I'm going to go through in-depth analysis on the topics that we've gone through so far, just so that you guys can see how everything is put together. Okay, so like I said, we start on the daily time frame. Okay, we can see that price is very, very bearish. Okay, why? Because we made a high, push down, lower high, lower low, lower high, lower low, lower high, lower low, lower high, potential low low incoming, or higher low, and then push into upside. But I want you guys to see that the overall trend is very, very bearish. Okay, I'm just going to draw it from here because it's daily. We don't need to go that far back. We are at a resistance on our daily, on the trend line. Why? Because price is ultimately moving to the downside. I'll leave it like that just so it's a bit easier. Right, and we can now see, okay, we have a trend. And when we have a trend, we have a direction. So when we have a direction, we can take a trade. And I want you guys to see that everything that I've just spoken about is happening. Okay, so we have the impulse, we have a correction, which is the pullback, right? So we have our impulse, right, which gives us a lower low. This gives us a lower high, a lower low, a lower high, a lower low, a lower high. Okay, and that is the basics of trends. Okay, and I will show you, I will go to a lower time frame, but this composes of many levels of support and resistance within, but they are not major. Okay, so anything below 4 hour I would not consider major. Anything above 4 hour I would consider major. So you're looking at 4 hour or daily to get a support and resistance level. So now let's go down to 4 hour and let's see what we can find. Okay, so again, I can already see that we have a support level that was support around this area. Okay, why? Because price went to this level, it bounced, and then it pushed back, and then it bounced, and now it came back and it resisted. And this is ultimately what support and resistance is. Okay, but now I want you guys to see something very, very, so in the previous example I spoke about lower lows and lower highs. So if we stick to this on a 4 hour time frame, I want you guys to hopefully see that we are making a series of lower lows Okay, we're making a series of lower lows as price moves. Okay, and that is possibly this is possibly the easiest example that I can show you guys with clear market structure, which shows us that price is making lower lows as well as lower highs. So I'll show you that here quickly. Okay, so again, this should give you guys an idea of the stuff that we are teaching and how price forms to get to this level. Okay, so again, we have an impulse, we have a correction, we have an impulse, we have a correction, right? You can see the impulse, this is on a 4 hour time frame, the impulse has many corrections within that impulse. So if you look at this on a daily, excuse me, it's gonna show us the impulse and corrections, right? So here we have impulse to the downside, and then we correct to the upside. Alright, so you can see we have the impulse from the upside, we correct. So again, long-term, short-term buys, long-term sells, short-term. This is almost like a consolidation phase where price, it after the impulse, it sort of played around a bit. Okay, and you can sort of see that we didn't fail, we didn't make any new highs, we didn't make any new lows. We just stayed within, I would say, this level, right? I would say this is the highest we've achieved, and then we correct. Okay, so this is a large correction. Okay, this correction is to the downside. Okay, which again, this goes with our overall direction that we should be looking for of sells. Okay, so you can see everything is linked here with trends, support and resistance, impulse and corrections. They all play a big role in how you analyze the market and what you should be looking for. So if you look at this, where price is now, you can see I've identified these lower lows, lower highs, right? And this is because the overall direction that we're looking at is bearish, because on the daily time frame we are moving to the downside. Okay, but I want you guys to see that on a 1 hour time frame or lower time frames, those candles that on a 4 hour just look like normal candles, composed of many corrections within corrections within corrections, which give us the big impulse on the big time frame. Okay, so if I show you this on a 4 hour, that this is a correction, I will show you that this is a composure of many corrections on a lower time frame. So if I go down to 2 hour, you can see again we have that correction. On a 1 hour, we have that correction again. On a 30-minute, we have that correction again, and on a 50-minute, we have that correction again. Okay, so I want you guys to be very clear that corrections, they look shorter over larger time frames, but on the smaller time frames, they compose of many more candles of what they do on a higher time frame. Okay, so here we have the impulse, we correct, right? So I'll go all the way back up again so you guys can see. So this is now a 2 hour again. You can see the impulse, the correction, the continuation. Okay, and that is basically how we trade as FX Goat. We put all of these strategies or these theories that we're teaching you, and we're putting them together. Okay, and you might be asking, why do we put them together? Okay, the more confirmations we have to take a trade, that is how we can separate ourselves from retail traders and almost classify ourselves as professional traders, because we have such in-depth knowledge of the markets that we understand that there is about 3 or 4 confirmations before taking a trade. Okay, and the more confirmations you have, the more reason you have to do something. So why wouldn't you? Right, and that is the basic theory of support and resistance combination with impulse and corrections in combination with trends. Okay, so everything plays a key role. So now I'm going to find another example for you guys on where we can start looking at support and resistance. Okay, so this is Euro USD again. We start on a daily. Okay, and we can see price is bearish. Okay, so there's no point in analyzing all the way from the 12th of Jan of this year, because by analyzing here, it's not going to help us find an entry over here. So we just use the most recent information that we have that goes back, that makes enough sense for us. And we can see here that, okay, price is in a descending channel, which means that we should be looking for sells. Okay, and this is one of the trades that I called last week, what I saw happening, and you can see it sort of played out. We have a break below the support level that we've identified, okay, which then gives us confirmation that we should look at sells. Why? Because if we break through the floor, we need to find the next floor to stop us from bouncing, and that could potentially be somewhere down here. Okay, and the only reason I say potentially is because we don't have confirmation of this yet, because we do not have any history on the left to compare it to, right? So price has it could potentially have been here before, but it's so long ago that we don't know. So that's why I say potentially we could be bouncing off the support level. Okay, and it's very clear. You can see price pushed below, it retested this level, pushed up, broke through, retested. Okay, and this is a perfect example of where resistance turns support. So you can see price impulse to the downside. I'm just going to take this whole candle, right? It gave us a lower low and a lower high, and then push below, give us another lower low, and then push below. Okay, so this is the same thing of price can act as a support and a resistance at the same time. Okay, so if we break through support, it'll most likely come back and retest before continuing in that direction. And that is the basics of support and resistance levels in terms of looking for confirmations and how we trade as FX Goat. Okay, and you can see I've identified this resistance level because we've bounced off this level, we came back to this level, we bounced again, we came back, we bounced, but now we broke through. So now price, like I said, price is likely to retest a level that it breaks. So it goes through, it finds the next floor, comes back, and it comes back to that resistance level. Okay, now I want you guys to see something here. We have, for me, this is a really good trade. Okay, so I'm just going to do this for you. Okay, hopefully you guys can see this with me as I type it out. So confirmations. What sort of confirmations would we be looking for when taking this trade? So let's say price was still here. Okay, so if we look at this again, we know on a daily time frame we are bearish. So we can put here daily time frame, right, is bearish. Okay, so there's already one confirmation. Okay, the second confirmation that we have is that we are at a resistance level. Okay, so now we've identified this resistance level, 4 hour at resistance. Okay, so this is confirmation number 2. Then the other confirmation we have, just on the 3 things that I've taught you alone, is the trend. So the trend is resisting. So we have a resisting trend line. Okay, and this is because we're on such a high time frame. This is very strong. I'm sure if we had to go to a lower time frame, we could probably add another 2 or 3. But just based on looking at, okay, the overall is bearish. We're at a resisting trend line. We're expecting sells because overall direction is for sells. We're at a resisting trend line. The daily is bearish. We're at resistance. Why would you not enter? Okay, everything is giving us the reason of why we should be entering this trade, just because of the confirmations, right? But now, another thing, don't get confused, is there is no such thing as a perfect strategy, okay? But by having such strict guidelines and such strict entry types, should I say, you are less likely to take a trade that is non-probable with the FX code strategies, because the quality that we teach and the quality of setups that you should be looking for 9 out of 10 times do play out, okay? But there is no such thing as a perfect strategy. There will be times where you can have a whole list of confirmations, right? But the trade still doesn't play out. And that is literally just how the market moves, how it is. But it doesn't mean we go and we change our strategy at the end of the day. Okay, so again, we have this, there's even another confirmation here. If we look at this, break of trends in trends on H4. Okay, so even if you don't catch the trade at this resistance level or at this resisting trend line, right, we have trends in trends. So this trend line that I've identified, we can place it at the top, and then we can fit it to the market, right? So this is where I say trends in trends, long-term sells, short-term buys, overall sells. Okay, so if we didn't get an entry at this level, which I've identified here, right, because there's 3 confirmations at this level alone. If you want to play it safe and wait for an extra confirmation, that would be on the break of this trend line that I have here. Okay, the break of this trend line would be an extra confirmation that you should maybe look at sells, because now we have 1, 2, 3, 4 confirmations. And I'm sure if we go down to a lower time frame, like let's actually go check the 1 hour, we can see that we've impulsed, we've corrected, right? And now we are selling. So even if you just use the 1 hour time frame, you could identify this. As long as you started on a daily to find your support, your resistance, and your trend, you could have spotted this. Why? Because on a daily we are bearish, right? So we've given us a double top, which is exactly what we spoke about in some of the patterns in the course. So double top, there's another confirmation, and given us a double top at a resistance, at a resisting trend line. Overall direction is bearish. We're in a small bullish trend, in a major bearish trend. We give us a double top, it's a reversal pattern. We come back, we get an impulse, we correct, and we impulse again. And this is the type of stuff that I personally, this is how I trade, and this is what gave me my breakthrough, is by rather choosing quality over quantity. Okay, you're not gonna find this kind of opportunity every single day. I'm gonna be honest with you, but when opportunity does come, it allows you to properly pay yourself because you have the theory and the knowledge behind taking this trade. Why wouldn't you? But anyway, guys, this was my lesson on support and resistance in combination with all the other theories that we've taught. Hopefully this, guys, gave you a good insight into the market and how we look at it and how we trade. But I will see you guys in the next lesson.